Hi everyone and welcome to today's More Report with me, which is Pro Market Analyst at Handtech Markets on Wednesday the 3rd of May. It is FOMC day today. It's a meeting tonight that's not got a press conference, hasn't got economic projections. It's basically just going to be where we see the Fed statement. And it's not really expected to cause too much of a sort of impact on the market, really. I mean, the expectation of Fed funds futures are 96%. Suggesting a standing pat from the Fed tonight. They're going to move more than likely in June. So the expectation would be that perhaps the Fed may well sort of allude to that rate hike in June and sort of suggest in the statement that may well be seen. It's interesting because we've seen US growth deteriorating or certainly disappointing. Economic data generally in the last month or so has come in underwhelmingly in the States. Inflation also falling away recently on the PCE, which is the Fed's preferred inflation measure. So it'll be interesting to see if the Fed makes any sort of mention of that, or whether it just sort of passes over that as a sort of as a sort of bit of data run that is not really going to be impacting in the long term. Now, obviously, we've seen data that expectations that growth in Q2 and Q3, Q4 this year is going to be much more improved than Q1. So perhaps the Fed will just sort of gloss over it a little bit. But it'll be interesting to see whether it does allude to June in any way for a next rate hike. So what we have got today is a market that's basically sort of flat, really, not really doing a great deal, very mildly dollar positive on the charts. Show you the dollar, very mildly dollar positive, but nothing really, and you can see that the dollar continues to consolidate around that long-term uptrend. In terms of your treasury yields, again consolidating, both the 2-year and the 10-year. Nothing really in terms of direction at the moment in front of this Fed meeting, which is interesting. So that's what we've seen. Also, the VIX has just picked up mildly off those sort of record lows that we sort of hit yesterday. Yeah, just basically consolidating really in front of this Fed meeting. So what we have got is a little bit of data in front of that, though. You've got the ADP employment report, which sort of sets us up a little bit, arguably, for payrolls on Friday, and also ISM non-manufacturing. Now, we've had UK construction PMI, and that is expected, well, it came in ahead of expectations, but we've also got at 10 o'clock the Eurozone GDP data, expected to be 1.7% on Q1, or 0.5% on the quarter. And then into the afternoon we've got the ADP numbers. Now, ADP is expected to be 175, 178, 180, depending on where you get your expectations from. Now, last month we had 263 on the ADP, but that subsequently came in at 98 on the non-farm payroll, so it wasn't a great harbinger for that. But certainly the markets do tend to move on the ADP nonetheless. Now, we've got also non-manufacturing PMI, and that's expected to mildly tick higher to 58 from 55.2. Now, my chart of the day is silver. Now, what we have been seeing recently is both silver and gold breaking down. Gold broke down, but silver has been in a much more corrective move than gold. And silver sort of created this top pattern back in mid-April, which gave us a downside target of around about 17 figure. It's 1680, and that's been more than achieved now. But look at this big double top pattern now over the last few months. Is this sort of breaking down? It certainly looks to be on an intraday basis. Needs a closing break down below 1678, which was that low from March. So the market is increasingly corrected, but look at that run of negative candles we had on silver. Incredible decline there we've seen in the last sort of 2 or 3 weeks on silver. Momentum indicators increasingly negative. Stochastics and RSI and MACD lines all in sort of real deterioration. RSI now well below 30, 24. When's the last time we saw 24 on the RSI? It's a long time ago. 24 back in Q4 2015. So this is possibly a real change of outlook for the silver chart. Certainly if it sort of continues and confirms below the 1680 level, that would really start to sort of put downside pressure on, and sort of then start to open up for a possible full retracement back to 1559, that key low from December. So this is a key crossroads moment. Will the RSI kick in as an oversold factor? That seems to be a big strong trend, so maybe not. But will the market start to sort of gain support around that sort of neckline? You've also got the 23.6% fib level. The fib levels have been decent turning points on silver. Look at that false upside break that we had back in April. Will we get a false downside break? These are all factors we need to sort of take into consideration. So it'll be interesting to see whether that market sort of does continue below 1680. Now, in terms of your hourly chart, very negatively configured. Rallies being sold into, MACD lines just crossing lower again, stochastics falling away, RSI falling away. It certainly looks like today is going to complete that downside break and possibly lower. So your initial support, that's gold. Can't believe I'm talking about gold. Sorry, silver. Negatively configured across the board. Yeah, rallies are being sold into, as I said anyway, on gold. So rallies is being sold into on silver. You've had that unwinding move, just basically renewed downside potential. You've got the 1675 support that's breaking down. It's all pretty negative, all sort of suggesting that any sort of value you get on silver is being sold into now. The sequence of lower highs, and it's all pretty negative stuff. So that's sort of pointing towards this downside break and an initial support after that, 1659, and then sort of 1650 area. So it's all looking fairly negative for the continued run lower on silver. So with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.